Hey everyone, welcome to this week's market forecast for the week ending March 11th, 2022. We are going to talk about the Euro USD, the pound, the dollar yen, the Australian dollar, and also gold or XAU USD. So we have a lot to cover today. And before we do, guys, I do want to say that none of the information in these videos is ever financial advice because it is just my opinion. And lastly, if you do enjoy the content, be sure to subscribe to the channel and click the bell icon to get notifications because I am releasing these videos once every week. All right, so let's go ahead and jump right into the Euro USD. So looking at the monthly time frame, this is something that I wrote about last week on the blog. The market has come in to a multi-decade support. Okay, so you can see here we have this ascending channel that has really developed here over the past couple of decades. Now, this level right now was tested on Friday. Okay, so even though the Euro USD is sitting on support, it is at a very precarious spot on the chart because at the moment, and we'll cover this in a second, but the market is sitting below this trend line off of the 2008 high. Okay, but at the moment, it is technically at a multi-decade support. Here, this was tested on Friday, okay? So right now, we need to see a bounce based on Friday's low. Otherwise, the euro is going to be in trouble, in my opinion. Because right now, again, this is a channel going back all the way to the 2000 lows. And you can see here, if we go into the weekly time frame, that this trend line up here off of the 2008 high, okay, you can see back here, 2008 high right here. We had several touches off of this resistance level, and it did serve as support back here in 2020, and again here over the past few weeks. However, here's the problem that I'm seeing right now. Friday's close took out this level. Okay, so this is the 2008 trend line. You can see it served as support for several weeks, in fact, several months, and then Friday closed below it. Okay, so whether we see the Euro USD stay above Friday's low, right here around the area, right around 109 or so, is going to be key. If we see the Euro USD close below this level down here, remember, this is the channel support off of the 2000 low. If we see the Euro USD give up this level, close below it, that becomes resistance. We could see another few weeks or even months of downward pressure on the euro. So in order to turn bullish though, it would have to reclaim the 2008 trend line up here. Okay, so until we see that, you have to be careful with the Euro USD. Now, if it were to reclaim that level, what I would be looking for is a move up here toward these highs just below 115. Okay, so these highs up here, that's going to be key. We would also have to see the Euro USD make that first higher high because really ever since back here, the market just has been making this series of lower highs. Okay, so it would have to reclaim this trend line and then also take out this high up here to really confirm the bullish reversal on a macro scale. Now, looking here at the bearish picture, okay, if we were to see the Euro USD close below this trend line down here, all right, we are potentially looking at a move down here toward some of these recent lows. Okay, so if it closes below that 109 region, then these are the two lows I'm going to keep an eye on down here. So right around 105.50 followed by 103.50. Okay, those are the key levels I keep an eye on if we do see the Euro USD close below this level. However, just keep in mind one last point on this. I'm not going to short this if we do get a close below this trend line simply because I think that the chance of a false break here is too high. If we were to get a move down here and a rounded retest like this of this area up here, okay, then I might look for a short. But immediately, if we got a close below this trend line, I would not take the short just because there is a decent chance that turns out to be a false break. And also the pair is getting a bit overextended here. Okay, so we'll see where Monday opens. Again, it has to hold above this area right around 109. Also reclaim the 2008 trend line in order to flip bullish again. Alternatively, a close below this area right around 109 would be bearish and could potentially expose that area right around 105. All right, so next up we have the pound against the US dollar. And I also mentioned this one last week as well. Starting here on the weekly time frame, you can see that the market has been just caught in this equidistant channel for the past few years. Now that said, it is also a very well-defined channel. Okay, you can see back here, the market is coming off of that resistance area. Just keep in mind that something like this though is going to take months, potentially years for it to play out. So could we see the pound revisit support down here? Okay, it is very possible, but again, that's going to likely take months, if not years, to play out. So the more immediate setup here, in my opinion, is going to come on the daily time frame. So looking here, we do have a descending channel off of this recent high from back here in May of last year. So right now, 1.316 is going to be support. You can see it was support back here, and it was also a key factor back here, was resistance and then support. Okay, so 1.316 is going to be key in the week ahead. We need to see the pound stay above that level on a daily closing basis. And if you are looking for a long, again, just my opinion, not financial advice, but if you are looking for a long, some type of bullish price action from this area, like a pin bar, could help to get the market back up here, maybe toward these lows. Okay, but at the moment, you have to understand too, that this is an established downtrend here over the past few months. In fact, almost a year now, the pound has been in a downtrend, making lower highs and lower lows. If it's going to reverse that, it has to get back above this channel resistance up here. Until that happens, sellers are in control. Okay, so just keep that in mind. For me, I'm going to go ahead and stand aside right now because the market is too close to support down here to try to short it. And at the same time, it hasn't quite tested support yet. And we also don't have any bullish price action for me to buy it. So I'm going to wait to see what happens down here at 1.316. And I think that the better opportunity, the better risk to reward at least, is going to come if we get a test of channel support here over the coming weeks. So if we were to see the pound give up this area down here, move down here into this area, then for me, this is going to be the much better risk to reward ratio. So even though I'll keep an eye on 1.316, okay, I do think that a move down here into this area over the coming weeks could provide the better opportunity. So next up, we have the dollar yen, which is very interesting here. We saw the market kind of fail to get above the 116 region here over the past few weeks, and it has formed, potentially a double top, although this is not something I would play simply because the market just has been so choppy and sideways here over the past few months. However, there are a few things happening here that I want to discuss, one of them being a potential opportunity early next week. So I'll get to that in a moment. But first, I do want to talk about these two trend lines here. So you can see that this trend line off of this high up here, okay, and these two highs, as well as this lower level that only has two touches right now. So it's not the strongest level, but you can kind of see how this forms a very slight rising wedge, okay? Now that could be bearish, but at the moment, the uptrend is also very much intact. So over the next few weeks, if you are looking to buy the dollar yen, if you're intent on buying this pair, for me, it's going to take some time, but for me, that would come down here around 112. Okay, so this was the level where the dollar yen broke out back here. And we never really did see a full retest of this level. Okay, we never got a confirmed retest of this area around 112. So we could see that here over the coming weeks. And this area should provide a lot of support. Now, the more immediate setup that could come on, as soon as Monday of next week. And again, not financial advice, just my opinion. But looking at the 4-hour chart, okay, so we have another trend line here that could come into play. So based on this low from down here back in September, if we draw a trend line off of that low and connect it to some of these recent highs, all right, you're going to see that Friday did something that could set up an opportunity early this week. So notice back here, the market never closed below it on this low, never even came close actually. This one right here never closed below it, bounced here, and then Friday appears to have closed below that level. So we got a 4-hour close below it, and notice how the very next 4-hour candle found resistance right there at that trend line. So the area for sellers to hold this week is going to be right around 115 or so. Okay, so we don't want to see the market close back above 115 if we are trying to short this. So we'll have to wait and see where this week opens, but we don't want to see it close back above 115 if this area is going to serve as resistance. Now that could take the market down here toward this trend line down here. Okay, the trend line we talked about earlier in the video. So if it does, then it could be a decent move down here toward this trend line, let's say right around 113.50 or so. So from current levels, from where Friday closed down here to this level, you're talking about maybe like 120 pips or so. So it is a decent move. And again, the risk to reward ratio is pretty decent here as well. So 115 is going to be resistance. Support comes in down here around 113.50. Now, obviously, if we saw the market close back above this trend line that we saw it close below on Friday, okay, so if it closed up here, then it would invalidate that breakdown that we saw on Friday. So keep that in mind as well. Fridays tend to be a little bit lower in volume, so it could very well be a false break. But as long as 115 stays intact as resistance, I do think the dollar yen could be headed lower this week. So next up we have the Australian dollar, which is really interesting on the weekly time frame. So going back about 4, maybe 5 years, there is a potential that this turns into an inverse head and shoulders. Now, obviously, this is a very macro structure. It is going to take potentially years for it to play out if it's true. All right, but it does have that overall look to the chart where the neckline would be way up here, nowhere close to the current price, but it is something to keep an eye on here over the coming weeks and months. Now, looking at the daily time frame, okay, so this is what I would look for this week. We have a descending channel here on the daily chart. Okay, so this level up here, resistance isn't very far away from Friday's close, but what I would be looking for early this week, okay, is if we were to get a rotation lower from the Australian dollar, because it is starting to get a little bit stretched here on the daily time frame, you'd want to see this area right around these recent highs. So right around Thursday's close, you would want to see this area hold because it is a confluence of support based on several areas. Okay, so we have this high back here, and we also have this trend line off of the May high from last year. So you're going to want to see this area right around 73 hold. Okay, you don't want to see the market give that up on a daily closing basis. If it did, then that would be potentially bearish for the Australian dollar. Okay, now, as I said, resistance is going to come in right up here around 743, maybe 744. So we'll see if we get that retest down here around 73, but we do want to see that area hold for the Australian dollar for this uptrend to stay intact. And again, resistance is right up here at that channel resistance. Above that is going to be this region up around 755. Okay, so that's going to be the next resistance level. But overall, guys, I mean, the chart does look pretty good. It is still technically in a downtrend though, so keep that in mind. Even though the Australian dollar did break out from this trend line up here, okay, and it also closed above this high, it is still technically in a downtrend. We have not seen a higher high. We saw a higher high based on this one back here, but as far as this one is concerned, the market is still making lower highs. So keep that in mind. We would really need to see the market close above this channel resistance up here to turn fully bullish and expose that area up around 0.755. And last but certainly not least is gold or XAUUSD. So I mentioned this one last week and it played out absolutely perfectly. I know a lot of members caught this move here last week. Okay, so what I want to start with here is the weekly time frame because the current structure looks very similar to what we saw back here. Okay, so back here, ever since basically 2011 all the way toward 2019, 2020, we saw gold put in this sort of rounded bottom. All right, so where it was making lower highs and lower lows back here, sideways movement through this area, and then all of a sudden we started to get higher highs and higher lows. Now, something very similar is happening right now, okay, on a much smaller scale, but still you can see where the market came down here, formed this sort of rounded bottom. Okay, so we had lower highs and lower lows. We had a sideways movement through here, and then this move up here, okay, that high was the first higher high in 20 months. So it was very, very significant. We had not seen a higher high since all the way back here at gold's all-time high, all the way back here in mid-2020. So this was a big moment. And some people asked me why I was not trading the bearish pin bar on the weekly. So notice how last week, okay, or the week before rather, it formed sort of this bearish pin bar. Although I would argue that the nose of this was too long and it also occurred right at support. So therefore, that right there is a reason I would not short it, but also the fact, more to the fact that it was the first higher high within 20 months. Okay, so anytime you see this type of momentum shift, this is not something that I personally want to short just because the downtrend here has been broken and we are starting to see that bullish momentum form. Now, let me touch on what happened last week, okay, the breakout that we played, and also what could be happening this week or what could be coming this week. So on the 4-hour chart, you can see where we have this trend line off of this low down here. So we have trend line support, and we also have this short-term descending trend line serving as resistance. So this was the breakout that we traded. You can see that it formed this symmetrical triangle here on the 4-hour chart. Okay, so we had the breakout right here between Thursday and Friday, and we got a nice, pretty much a 2% move off of that breakout. Now, 1960, okay, is the next level to keep an eye on early this week because notice back here how 1960 served as resistance for gold, and then we saw last week close above that. So we'll have to wait and see where this week opens. But if it does open anywhere close to where Friday left off, okay, or even higher, then 1960 is going to be support. Okay, so I obviously want to see gold take out this high up here, but right now it does appear that 1960 is going to be support for the coming week. And as I mentioned last week too, the objective from even this 4-hour breakout comes in all the way up here around 2015. Okay, so this is the objective just based on this symmetrical triangle that broke out. And also obviously 2075 is the high. Now 2015 is also a key level. If we go back here toward the all-time high, you can see where 2015 served as support back here. All right, so support, the market broke down, and then 2015 became resistance. So not only is 2015 the objective, it's also a price action level. All right, so in summary, for the week ahead, I'm looking for this area around 1960 to serve as support. All right, so based on the daily and weekly chart closing above this area back here. Okay, so we'll see how it reacts to 1960. A move back below that, and we could be looking at, potentially a retest of some of these highs through this area right around 1950 or so. But ultimately, just based on the big picture and also what's happening around the world, I do expect gold to be hitting all-time highs later this year. All right, guys, so I hope that this video helped. If it did, be sure to subscribe to the channel and click the bell icon to get notifications. Smash the like button and leave your comment below. I will talk to you guys again next week.